In other news, crypto lender Voyager Digital files for bankruptcy. July 6th, U.S. crypto vendor Voyager Digital said on Wednesday it has filed for bankruptcy, becoming another casualty of a dramatic fall in prices that has shaken the cryptocurrency sector. Crypto lenders such as Voyager boomed in the lockdowns, drawing depositors with high interest rates and easy to access loans rarely offered by traditional banks. However, the recent slump in crypto markets sparked by the downfall of two major tokens in May has hurt lenders. New Jersey-based Celsius in June froze withdrawals and has hired advisors on possible bankruptcy filing. Voyager froze withdrawals this month, as did another lender, Singapore's Vault. Last week, Voyager said it had issued a notice of default to Singapore-based crypto hedge fund Three Arrows Capital for failing to make payments on a crypto loan totaling over $650 million. These are domino effects, right? You have Three Arrows Capital failing to pay Voyager, and then Voyager failing because they're not getting the payment from Three Arrows Capital. It's kind of crazy. Three Arrows Capital later that week filed for Chapter 15 bankruptcy, which allows foreign debtors to shield U.S. assets, becoming one of the highest profile investors hit by plummeting crypto prices. 3AC is now being liquidated, Reuters reported last week. Quote, the prolonged volatility and contagion in the crypto markets over the past few months and the default of Three Arrows Capital on a loan from the company's subsidiary Voyager Digital, LLC, require us to take deliberate and decisive action now, Voyager Chief Executive Officer Stephen Elrich said in a statement. In his Chapter 11 bankruptcy filing on Tuesday, Voyager, based in New Jersey but listed in Toronto, estimated it had more than 100,000 creditors and somewhere between $1 billion and $10 billion in assets and liabilities worth the same value. Voyager had last month signed an agreement with the trading firm Alameda Ventures, founded by Sam Bankman-Fried, CEO of major exchange FTX, for a revolving line of credit. A filing with the U.S. Bankruptcy Court Southern District of New York showed that Alameda was Voyager's largest single creditor with unsecured loans of $75 million US dollars. Alameda did not immediately respond to requests for comment. Chapter 11 bankruptcy procedures put a hold on civilian litigation matters and allow companies to prepare turnaround plans while remaining operational. In a message to customers on Twitter, Elrich said the process would protect assets and maximize value for all stakeholders, especially customers. Voyager said on Wednesday it had more than $110 million of cash and owed crypto assets on hand. It intends to pay employees in the usual manner and continue their primary benefits and certain customer programs without disruption. Voyager has hired Moelis and Company and the Consello Group as financial advisors, Kirkland & Ellis LLP as legal advisors, and Berkeley Research Group LLC as restructuring advisors. Now, I kind of wanted to talk about something that's an interesting idea, because one of the things, and this is all speculation, right? But if we look at Bitcoin and its original white paper, what we were looking at, of course, was the idea that you would be able to transact without the interference of a third party. And we see a lot of these third parties that were trying to stand up and help people transact between crypto and fiat currencies. And then they seem to have completely ignored the fact of the traditional halving cycle, which creates these really low times and these really high times within cryptocurrency. And it makes me wonder if that is certainly if that is to a certain extent by design, right? To where it does force out these third parties, because if you are trying to interact with crypto in a traditional manner, then you are going to get just absolutely hammered when these halving cycles happen. And then you go bankrupt and kind of it gets weeded out. Meaning I kind of like this culling of that the halving creates, that the bear market creates, is potentially a good thing for the freedom of cryptocurrency and the sovereignty of the individual and their financial autonomy. And then I did all the keywords that were possible there, yes. But that is kind of what I see happening, whether it was by design or not, though. I can't really prove anything. I just think that it's extremely interesting. That doesn't mean that authorities aren't going to try to get all of the taxes they possibly can out of the individual. UK tax authorities seek public consultation on DeFi tax treatment. HMRC follows up on Chancellor Sunak's pledge to enhance the competitiveness of crypto asset taxation by calling on the input of DeFi stakeholders. UK tax authority HM Revenue and Customs opened a public consultation on the tax treatment of DeFi lending and staking on July 5th. The lead official in the inquiry, Alex Bossinu, something like that, called on the UK DeFi stakeholders to submit evidence for a review on the topic. Quote, HMRC would like to hear from investors, professionals, and firms engaged in DeFi activities, including technology and financial service firms, trade associations and representative bodies, academic institutions and think tanks, and legal accountancy and tax advisory firms. The consultation period will run for 2 months from July 5th to August 31st, after which a summary of responses will be published along with details on what happens next. Responses or inquiries can be made at this email. As part of the fintech sector strategy, the UK government voiced its intent to develop closer integration between crypto assets and the legacy financial services sector. Yeah, and guess what we don't want? We don't want tighter... We don't want that, right? We don't want tighter integration, closer integration between crypto assets and legacy financial services. That is against the principles, so this would be a no. The overarching goal is to position the UK as a global hub for financial innovation. Part of this strategy includes the formation of clear and appropriate tax treatment for digital assets. On April 4th, Chancellor Rishi Sunak posted about the government's plan to turn the UK into a crypto asset technology hub. Among the goals was a commitment to enhancing the competitiveness of UK tax system to encourage the crypto sector's development. Preliminary findings showed the government is aware that current tax rules fail to account for the sometimes complicated activity of DeFi staking and lending. Specifically, the consultation statement highlighted instances where a taxable event occurred, yet the asset was not disposed of, thus unfairly increasing the tax burden on the DeFi investor. Quote, we have been told that there are situations where the tax rules treat transactions as disposals where the effective economic ownership of crypto assets is retained. The inquiry aims to gather evidence on how existing tax treatment impacts DeFi actively and advise lawmakers on the options for the reducing of any friction. However, the consultation only concerns DeFi lending and staking. The lending aspect includes pooled liquidity provision, but not DeFi activities as part of the trade, such as operating a DeFi platform. On June 22nd, the UK Treasury announced it would scrap plans to require service providers to collect data on unhosted wallets. That's good. A move that was met with relief from privacy advocates. Taken in conjunction with the DeFi consultation, it appears Chancellor Sunak is genuine in his attempts to transform the UK into a crypto hub. What is that like quote where like it's not correct, but it's going in the right direction? There's like a special quote for that, but this is the proper direction. Oh, you know what it is though? It's in regards to religion, and it was a funny quote. And first of all, it doesn't reflect my own personal beliefs or opinions, but it was, who was it? It was, Christopher Hitchens, said that throughout time, like people had less and less gods, and now we have one. And every day we're getting closer to the actual amount. So I was thinking of that quote when I was thinking of like the amount of rules and regulations surrounding crypto. And for the UK here, we're getting less and less rules. And so every day we get closer and closer to the amount we actually want when we're talking about cryptocurrency. Thanks for checking out this clip from the Crypto Mining Show. You can check out the full episode here or more crypto content down here. Also, I'd like you to check out my locals page at sonofatech.locals.com, where you can become a member for free or choose to be a $5 a month supporter that unlocks additional content.